Our next speaker will join us from Latvia. Mr. Reinis Persins, the chairman of the management board of Altum, will give us a practical example on how to fund an ambitious transport infrastructure project. Please, Mr. Persins.
Your Excellency, Mrs. Kaljulaide, distinguished guests, it's a great honor to be here in this conference, and I'm very glad. And first of all, I would like to say thank you to all my Estonian neighbors, to our colleagues, and particularly to my colleague Titin, Supervisory Council of 3Cs Investment Fund. I guess my story will start from the broader sense, and I will look why we actually have this interest on the fund, why we went through during those years, and finally we also invested in the fund, what we are looking on the project, but then I will zoom a bit on transportation, which is something which I asked to do, and I will give also a case study. So briefly, this is my story, what I will try to do in those couple of minutes. So before I zoom, I will try to go through the first slide and just some kind of information about what we do. So we are state-owned financial institution, similarly like several others here presented. We are rated by the Moody's, and we are very glad about our rating because our rating is just below Latvia's rating A3, and there is no other state-owned company or any other private company which has a higher rating than we do. We operate in accordance with the law of development finance institution, as well as we have EC's regulation on our mandate, and basically what we have a mandate to operate where there is a market gap. But what is the problem? Very shortly, that's the reason why I'm actually here, because what we see is like to operate with this in this mandate, in this framework, we have a quite small thresholds for different services we provide. Our main target till pandemic crisis was SMEs, and if we are talking about loans, then only 3 million euros. What was the threshold what we could provide ourselves, or together with the banks? You know, the mezzanine loan, we could provide up to 5 million euros. So that's the reason, if I put this like a fast forward, on September 2018, we signed a memorandum for this fund, for creation of this fund, together with only 5 more countries. And actually it started in the summer when colleagues from BGK, Beate, and I always admire how she's like an engine. She and her team is like from BGK, like an engine for this fund. How fast this creation of the fund took place. So after signing of a memorandum, next year it was also creation of the fund. And Poland and Romania were among those first 2 countries. And I guess we were among also those who are very active. We created mini conference here in Riga. Afterwards, after a couple of months, there was a positive decision of the government. And basically, together with Estonia, we were 3rd and 4th country who joined this fund. And now I'm very glad to see that there is a lot of more, right? So this is very briefly where we stand. And you can see clearly the reason we joined the fund, because we see that there is a great thing how this fund could give additional value to our economy. If we are looking now here, and I always say, usually I say that, and also I said that the same in our mini conference, Latvia, when Latvia joined, when Altum joined, we will always say, very good this cooperation, but from our perspective, internal rate of return for this fund, this is of course crucial thing. But the second thing, as I already mentioned, we joined because we see that it can give additional value to Latvian different projects. And you can see here those 3 fields: transport, energy, digital infrastructure. We made a kind of drawing of all those projects which are interested or already submitted to this fund. There are projects which are dealing with transport, with some road. There will be one particular with the railway. Then there is also something in digital infrastructure, data platforms, fiber network, create a roll-up, and so on. With energy, we have examples like with La Flora project, which is interested in creation of a wind park, and of course also LNG project. I will go with the next slide. I hope you can see that. So here is some things which comes into our mind when we are talking about getting finances to those projects. First of all, is combining different fundings, because most likely this fund will not be the only answer, and I will elaborate on this issue in the next slide a bit more. Then what we also have noticed, it's very crucial to have support from local municipalities. And if we are talking about roads, railways, it's, I guess, obviously clear. And for example, the same could go to the railways, to Rail Baltica and roads. When you are building that, of course, there is a lot of also talks with the municipalities and also the local inhabitants, the local people. In the same time, we see that there are a lot of projects which are in very good cooperation with municipalities. And lately, I guess before 2 weeks, I was informed by the La Flora, this major wind park creator. It's already existing firm which will make an industrial park near Jelgava, and they already have said that they have very good cooperation with this municipality, Jelgava's municipality, and by creation of this industrial park in amount of something like 180 million. Then 2/3 could go with this wind energy park, and actually I'm very glad that actually La Flora, a company from pure private sector, this is not state-owned company, La Flora private sector, it was the first company who signed NDA with our colleagues from Amber. And then cross-border cooperation, this is the thing where actually I can elaborate a bit more, that sometimes we see quite good projects, right? And this number could be much higher than I showed in the slide before. But there is a lot of information how we can show that this is a green project, that it's have a good IRR and so on. But some of those projects are missing cross-border cooperation aspect angle, and then we said, please also get once again with us or with Amber when you have also answers to this, because at the end of the day, this also is one of the crucial things where project is interested to invest too. Next slide goes particularly for funding infrastructure, and I can give this transportation angle, looking from transportation point of view also, but also it goes for other fields. And I do affirm that the thesis that actually with international financial institutions, this is not something where there should be some jealousy or, I don't know, overlap of business or something like that. I would just even say that it's complementary or synergy. Because we have also talked in a transportation sector with the management board of Latvian roads, Mr. Lazdowskis, who is also very deep in several of those project negotiations with international financial institutions regarding Ķekavas PPP project, bypass project, which is quite famous here in Latvia. And what we have also seen in this case, that there's a lot of those possibilities to attract a loan, for example, till up to 90% from different institutions, right? And if you have a project like Ķekava or project something similar like that, where you could have like 100, 150 million euros, then if the biggest money comes as those institutions or other private sector money, then this equity part is quite low, right? And it's still about the millions, but it could be like 10 or 12 or 15. It's something where you could have a lot of possibilities to attract serious equity thing. Right, but here the same example. If we are talking about the roads, if they are making big bulk of the projects in amount of 400 or 500 million euros, that would be more interesting. There is those big institutions who provide with the loans, and then there is, for example, Amber Fund, and we have talked together with Latvian roads and from Amber, Joy Phillips, right, and it was understanding that something like, for example, Via Baltica project, if there will be something like 400 or 500 million euros, different projects put together, then fund could be very interested in. Then, of course, also some private sector money come in, but actually in Latvia, this is not a very typical case. Small venture capital industry, have to be frank. Some private investors, but of course, banks could be the ones, but it's a long-term project, so not very often also banks look on that. And of course, public funds, including our one of the bright stories during COVID time, Capital Fund of Latvia, where we are together with the pension, still to be frank, our account operates again with the threshold 10 million euros, so we can help, but not solve all those finance needs. Let's go further. And now I will go to the one more case, and case not like just mentioned that, but I will look on a bit deeper way. We can see Rail Baltic, I guess, a project where we are familiar with, right? And I will skip for saving the time. I will skip all the historical part and why it's needed and so on. Just we'll look that there is a project from Latvia, Salaspils Logistical Center, right? And you can see Rail Baltic, and looking from the Baltic's perspective, if you are looking on Latvian numbers, you can see costs during upcoming years, and again, an impact also on. You can see that the cumulative effect on GDP by 2025 will be close to 2%. And this is not me just to say that. This is also a very reliable source. It's Bank of Latvia, and you can see also on Latvian case and Baltic case is almost 3 times more this impact, positive impact than the costs. So this is great. Some more information about whole Rail Baltic project, which you are very familiar, I hope so. You can see that there is, of course, a great travel time savings, also air pollution reduction, noise reduction, travel safety increase. You can see all of those good things are here, and they are put into the monetary terms, right, in billions or hundreds of million euros. And you can also see that, for example, there are other economic benefits in almost 3 billion euros. And I also have to underline that here is already taken out, for example, buses or airlines, this turnover, which will be missing because, for example, I don't know that the Rail Baltica train will come from the Tallinn to Riga and then to Vilnius. Those clients will migrate. Altogether, this is already like a bottom line with huge benefits. And we know this project, and we know that it will happen either with this fund or not. But there are different side projects, and I'm very now glad to show you one of those side projects, which can actually happen or cannot happen, and it will also be depending on different type of ways how to attract finances, including, and I want to underline, including also today's topic, 3C's investment fund. So you can see here also a case study of transport project Salaspils Logistics Center, as I promised. And you can see that the total investments is just below 200 million euros. Those estimations are quite rough, but in the same time, we know what we have this information, what we receive from project submitters, that it's a bit below 200 million euros. You can see the portion of public finances, and you can see also private equity, which is at least a need for 34 and actually more million euros for those latest thoughts. What we have heard, it most likely will be more. But anyway, so this is a portion which is also needed. On the right side, we can see, I guess, very crucial thing that actually in 3 years' time, from the starting the project, you will have a positive EBITDA, which is quite important for such a great project like this. And if those numbers might not seem so huge, right, for this side project, and you can see also this estimated forecast of EBITDA, you can see EBITDA margin, which is very high. You can see this 25%. I'm just looking from as a banker, from our perspective, we like projects already with 10, 15, and a bit more. This EBITDA margin, I guess, 25 is considered to be very, very good for a big project like this. Let's go further. Sorry for some detailed information, but as I promised, I want to also give some more numbers because I do believe in numbers. And if we are looking on case study a bit deeper way of the Salaspils Logistics Center, we see also return on equity for 20 years could be more than 8%. Of course, from finance perspective, we could to have a bit better those ROI numbers. We could try to squeeze up on, I don't know, 10 years, and then you would have, like we have calculated this return on equity, something like 12%, and for 15 years to be like in the middles, above 10%. But anyway, I guess this is not the most important thing. I guess those 20 years are fair enough, and this is also something that we have discussed with Amber, and they said this could be okay. Once again, we see that there is a break-even point in the third year, so we are very glad about this situation. So quite a good example of the project what could be, as I said, Rail Baltica, but then is one more side project. So if I need to make some kind of conclusion, at least in those 15 minutes I had, I just try to show you our expertise from quite small company development institution, but we are quite proud one, right, in Latvia. So why we are interested here in this fund, not only our internal rate of return of our investment, what we will get from the fund, because we are investor. We are very interested in practical point of view, right? The project is the name of the game. We have a lot of good projects in different phases, starting from quite green with very detailed information, right? Then I move to the transport and just try to clearly show you that in a big picture, like Rail Baltica is a big picture, there might be some good projects which will happen just because also this great fund is here. So thank you very much, and I'm looking for a great project for this fund and also a great fruitful discussion later on today. Thank you.